I have a video that I think shows that. Would you play it, please?
I know what's going on here. I wish you'd just say it. You don't really want me to live with you. Your house really is too small. I'm sure the money's tight. Besides, I'm his mother, not yours. You probably think this isn't your responsibility. Yes. I can see it on your face. You wish someone else was stuck with me. That would be more convenient for you, wouldn't it?
My mother died in October of 1987, and I saw this video for the first time. It's a commercial for Catholic Charities in 1999, and when I saw that commercial for the first time, I saw it from my mother's perspective. How humiliating for a woman, a proud woman who lived a dignified life, to know that her legacy was one of dependency upon her children. And I guarantee it took years off her life. See, folks, that's what our business is about. That perhaps critical illness or long-term care can help do that. If my father provided more for my mother, if she had long-term care or some other type of insurance, to at least know that the care was being provided by her. And that's the business we're in. And those are some of the opportunities that we have to really fulfill in society, and we should do it. Let's talk about retirement. Now that we're getting into the retirement stage, the emphasis used to be on return on investment on the accumulation side, but guess what? Now it's on the reliability of the income. And you know what? Those are two different things, because taking money out is substantively different from accumulating it. There was a fellow by the name of Moshe Milevsky. This guy is a professor in Canada, and he was a big critic of variable annuities. I know you're beginning to sell those here. Income vehicles. He was a big critic, but notice, Confessions of a VA Critic. By promising a lifetime of retirement income, insurance companies are taking on longevity risk, a risk that most defined benefit pensions are running away from in droves. He sees the impact. And let me show you this, because a lot of people in the United States, they used to have defined benefit plans. You know, I work, and then I wind up with 50% of my income as a pension. We were doing away with those because we came up with defined contribution plans. Fund your own retirement, even though you don't know anything about it, go ahead and do it. We thought that was a neat idea. But anyway, what I did is I called up a major mutual fund organization, and I said I had $1 million, and I'm 65, and I want to take money out. And tell me how much I can take out so I have a low probability of running out of money. I don't want to run out of money. So what they did was they constructed these portfolios. This almost all in stocks, this mostly all in bonds. They used a term called Monte Carlo. I had no idea. If I was a civilian, if I didn't know what was going on, I wouldn't know what they were talking about. And what they did is, whether I'm almost all in bonds or I'm all in stocks, you will notice that the amount of income I can take out is almost the same. There is no leverage. On the accumulation, I'm more in equities. I got the possibility of more upside. The issue here is, when I'm taking money out, I actually have to take a little less out. Oh, I forgot. One question they asked. They knew how old I was. They knew how much money I had. But they also asked me, how long do you expect your retirement to last? I guess the rest of my life. How long is that? Guess what? I don't know it. So I did this for 15 years. But what if I live 25 years? If I live 25 years, I got the same problem. I'm down to $3,800 a month. And it's across the board. And I might live beyond 25, or I might die earlier. That's one of the things that we do in the insurance business. But you know what? There's another risk that people didn't have before. And that's something called the sequence of returns. Remember this guy, Moshe Milevsky? Here I am with my $1 million nest egg, $3,800 a month. I'm going to increase the income by 3% a year. He says this: you could have two portfolios. This one has 2 positive years, and the negative one's in the third. You with me? And this one has a positive the negatives the second year, and the positives the third. On an accumulation phase, if you had these two portfolios spinning off into the future, they would both be up at 8% and they would be identical. You with me? If they worked that way, it'd be 8%. But you know what? When you take money out, this one blows up at age 86, this one blows up at 90. You not only have to be concerned about your rate of return, you have to be concerned about the sequence of returns. Because guess what happens when you work and you want to take money out? When the market goes down, you have to take less out. So to solve this problem here, all you have to do is take out $3,800, instead of taking out $3,800 a month, take out $3,300 a month. What? Yeah, just take less money out. No, you don't understand. This is my retirement account. I wanted to get a certain amount of income out, and now you're telling me I got to take less money out. They said, that's right. Your dollar cost averaged in. Now you get the dollar cost average out. You got to be crazy. I got to take, well, if you take more money out, what happens is you don't have a 10% probability of failure. You now have a 20 to 25% probability of failure. You never told me that up front. Well, what the heck, you know? I mean, take a look at this. This was the Wall Street Journal. How retirees can ease the pain of a market rout. Listen to this. Give yourself a pay cut by withdrawing a little less today and continuing to take less out over the next several years. What are you kidding me? Nobody in the states who put money into these defined contribution plans signed up for this. They've always lived on income. And now all of a sudden, they've got this asset and they're drawing income out. That's the difference that we do in the insurance business, is we can guarantee that they won't have to take less money out. See, what we do in the insurance business is we humanize the capital markets. We pay money to people when they need it most. In life insurance, if someone dies prematurely, and then on the annuity side, we can guarantee income for as long as they live using a mortality pool. And that's the fundamental difference that we provide people with. One other thing, I saw that you're going to be talking a little bit about Social Security. In the States, the baby boomers, you know, the people who were born after World War II, are now all turning 62. So now they have a decision to make. At age 62, they can get $18,000 a year. At age 67, they can get $28,000 a year. So just by waiting, they can get substantially more. What decision should they make? Here's the point. When we tell people it's $18,000 a year, they're not impressed by it. They think it's very small. But what would an individual have to set aside to give themselves $18,000 a year for 25 years with a 10% probability of failure? Don't talk to me, talk to Fidelity. They say you multiply the income stream by 25. It would take $450,000 for someone to set aside to take $18,000 out to have a high probability of not running out of money. If you went to age 67 and it was $28,000, if you multiply that by 25, it's $701,000. Where could you invest $450,000 to get $701,000 guaranteed in 5 years? You can't do it. But you can do it in a mortality pool. That's why immediate annuities are going to be a big part of our business, because it's the only place where older people can leverage their income predicated on their age. It's an upside-down life insurance scheme, and that's something that's really important. But let me get to the heart of what we really do for a business, in our business. And I'll tell you, this happened to me. I went to Fordham. I think it's a Jesuit school. And I bumped into one of my teachers in the early 90s. And he said to me, he said, you know, Joe, I re-examine my vocation every day. And I said, Father, you're 88 years old, so somehow I think you got it knocked, you know. But he said something very interesting to me. He said that Socrates said that a life unexamined isn't worth living. So I began to think about that, and it triggered someone else I thought about, a guy by the name of Joseph Campbell. He was the premier mythologist in the United States. His book, The Hero of a Thousand Faces, he explored all religions and faiths throughout, back to 3000 BC. And after all of his study, what he came back, as you examine what you do for a living, he said that what you need to do is to follow your bliss. That is to do the one thing that truly fulfills you. And what I think he was really saying is what you have to do is to live a significant life. You see, significance is different from success. Success is about you and how much money you make, but significance is about your impact on other people. delivering intrinsic value to other people. And intrinsic value is not measured by how much money you make, but by the size of the problem that you solve. And you tell me a profession that solves problems bigger than this. You protect the innocent when someone dies prematurely so that people have peace of mind. You can provide people with a worry-free retirement so that they can maintain their independence. You can protect their income when they get sick so that they maintain their dignity. And finally, you provide a legacy when they die. And you tell me if that's not living a significant life. And I don't think as an industry we spend much time telling the people who sell our products that that's what they do. Because in my mind, they're all a hero. They have a tremendous impact even on a complete stranger. And I want to show you one. This is one of our agents. This is very interesting because she's speaking Chinese, but there are English subtitles on the top, and for those who need the translation will hear it. But when you see the way she emotes, I think you'll get the message. Play it, please.
保单，那么6月份，他突然来找我，他说：“艾琳，我现在呢做手术了。”我说：“出什么事儿了？”他说：“我是子宫颈癌。”第3次手术下来之后呢，他就来跟我说：“他说，艾琳啊，医生说我活不了多长时间了，我要回家见我妈妈一面，我要死到中国去。”我说这样吧，我说这边的事情你就放心，我现在送上去。到了中国以后，他说不治，在家待着。没想到因为他是很疼啊，他没办法在家忍受，送到医院去就开始又是杜冷丁，又是输血清、输蛋白、输什么，按中国那个医药很多，一天6000人民币，1万多美金，10天不到就告急说用完了。又过了1个礼拜，咱们的支票就寄出去了，结果他呢，入了账，把钱都还上，然后给他太太打款，一次打2万，打2万这样子。那么又过了大概1个多月吧，他跟我说，他说他太太那个已经基本上不行了。那么我说我要不跟他通电话吧？他说他可能说不了话了，他说让给带个信儿。他说非常感谢艾琳，这一辈子呢，他最感谢的一个人就是艾琳，因为他呢帮助我，在我最关键的时刻，他说让我能够渡过来，不然的话我不想给你们欠一屁股债，最后我走的时候，你们连把房子可能都要卖掉。他说哎呀，我真的我怎么不知道怎么感谢艾琳，你就跟艾琳说，我9泉下面我都会感谢他的，我给他祝福，我都会给他祷告。后来我就跟他先生说，我说你叫他安息，我说我们这个事情是他自己做了一个正确的决定。
Tell me another profession that could have such a profound effect on almost a stranger. The last person that she thanked before she died was Eileen. That's really the benefit that we can provide people who sell our products, is to have a human interaction like that. Did you feel that? Well, what you felt, I can't explain. Heinrich Zimmer said the best things can't be told, and Carl Jung spoke of the collective unconscious, which means that you could bring someone from a different language, a different religion, a different time, and if they saw that and understood what they saw, they would feel the exact same thing. Some people think our purpose in life is to find meaning in life. I don't think that's what we seek. I think what we seek is to experience being alive. And there's no better way to experience being alive than in the service of others. In the famous book, Man's Search for Meaning, he said that significance cannot be pursued, it must ensue, and it can only do so as the unintended side effect of one's devotion to a cause greater than oneself, or as the byproduct of one's surrender to someone other than oneself. As a human being, you can't live a significant life unless you positively impact on others. And as the author said, the tragedy in life is not what men suffer, it's what they miss. And why would you be in this business and miss this? Because in the end, what will really matter? What will matter is not what you bought, but what you built. What will matter is not what you got, but what you gave. What will matter is not your success, but your significance. What will matter is not what you learned, but what you taught. What will matter is every act of kindness and or sacrifice that ennobled, empowered, and enriched others to emulate your example. What will matter is not your memories, but the memories of those who loved you. What will matter is not the number of people you knew, but the number of people who have a lasting feel of loss when you're gone. In the end, what will matter is how long you're remembered, by whom and for what. And living a significant life is not something that happens by accident, it's by choice. And by being in this business, you've done that. I just want you to enjoy it. But on a personal note, I want to show you something. This is my mother. Here's Peggy. Remember Peggy back in the S&P, the gal who was born in 1943? Here's Peggy. And there's my sister, Marie. My father was a very successful attorney. He used to work in the Truman White House. My mother used to go to the White House for tea regularly and go to really nice cocktail parties. We had 3 homes. My father cashed in a $100,000 whole life policy from New York Life to buy an apartment building and got killed in a car accident. And my mother woke up one day with kids she had to raise. And she was not brought up that way. Do you follow? This was a different generation. I mean, she had to do it. She wound up being a secretary in the bartenders local in the Bronx. And she had to deal with that. She made some tough decisions. You see the 2 girls? Neither one of them went to college at the appropriate time because the girls had to go to work to make sure the boys went to school. How do you like that? That's the way it was, and that still lingers. And I described in terms of what happened with my mother's death, and it was there. And you know what? I was in the business since 1974. This is my own transformation. And I never talked about it. I didn't think it was relevant. I was more obsessed with the left brain and the tax treatment of our products. I didn't really fully understand the impact it could have on other people. And you know what? When I started exploring this more emotional thing, because I started fee-based planning at MetLife, and I thought this thing would take off, and, well, it kind of did, but, you know, people leave money, and you tell them logically what they got to do, and I thought people would buy like mad. You know what? They didn't. We're not in any greater numbers for the amount we invested. I said, something's missing, so I started dealing with this emotional stuff. I got sucked in. And all of a sudden, never even talked about it because I suppressed my feelings on the subject and only dealt with my left brain. I'm only talking about balance. I'm not talking about ditching. You got to know your stuff. But I think we spend too much time dealing with the stuff and how people feel. And I was part of it. So around 2002, I started to get mad. By 2004, I was really mad. And rather than describe how mad I was, why don't you take a look at it? This is me opening the 2004 $1 Million Roundtable. 8,500 of my closest friends. Listen to what I sounded like.
And I want to know, where was the person of significance, the advocate who could have taken my father, even pushed him up against the wall and said, don't you understand you have to have life insurance because I'm advocating for your wife, because if you're gone, life could be miserable. Where was the advocate who advocated for my sisters who were denied a college education at the appropriate time? And where was the advocate even for my father, whose youngest son stands in front of you now? And the only legacy I can tell you my father left us was he left us alone.
Can you imagine getting in front of 8,500 people who you don't know, talking about the father you don't know, and sounding like this? But that's what happened. I suppressed my own feelings towards it. I was half the person. I'm over it now. And a number of things helped me do that. And as I started getting better because I started expressing it, I began to really understand what our products do. See, in our culture, I'm talking about the U.S., sometimes who you are and what you do are separate, and that isn't healthy. And that's where I was the poster child for that. But as I came to terms with it, I'll tell you one thing that finally did happen that put me over the edge. I was in a meeting, and someone was complaining, saying, you know what, he's really mean, he comes up with stuff, he doesn't suffer fools well, he hurt my feelings, you know. I get this all the time. I'm not very popular. I'm a home office guy, but I'm not a normal home office guy, so I don't really fit, you know, so I'm getting this. To me, I'm perfectly normal, but, you know, that's what they're telling me, so I hear this stuff. So I'm like, yeah, all right, you know, I hear this all the time. And I said, you know what? Why do I get this feedback all the time? And do you ever have these things like in a nanosecond, all this stuff starts floating through your head? I said, why do I get this? How did I get in this business? How is it now that I speak around the world to tens of thousands of people a year? How did this happen? And it came to me in an instant. I realized that what I do and how I got here and how I follow my bliss, as Joseph Campbell says, was I follow the dictates, I think, of my mother. I think it was her invisible hand that positioned me in this business to talk to the thousands, to save the millions. And that was my redemption. You see, in life, it's not the pain of the journey, it's the rapture of the revelation. Unfortunately, mine happened when I was 55. I wish it could have happened earlier. But hopefully, this is helpful to you, to think about the business. But I'll tell you the best thing that happened. The best thing was, we're Irish, and my mother always wanted to go home to Ireland, but she never made it. But in 2006, I spoke at MDRT Ireland, and I was able to show her image. And in my mind, I took her home. Thank you.